Bitcoin's down over 31% from the October all-time high of $126,000. Ethereum's bleeding. Solana's down 50% year to date, and even the big ETF names are seeing billions flowing out the door. Everyone's screaming about Trump's tariffs, AI bubbles, or whale dumps, but that's just noise. The real trigger that nobody wants to say out loud is sitting right in front of us, the Federal Reserve and the sudden evaporation of liquidity. Today, I'm breaking it all down, why this crash happened, what the December Fed meeting actually means for crypto, and where Bitcoin prices can go from here. Smash the like button if you're still holding through this bloodbath, and let's jump in. Here's what actually happened. After the election, markets priced in endless easy money. 60 billion poured into spot Bitcoin ETFs in the first 10 months of the year. Leverage got insane, open interest hit all-time highs, and then October 10th happened. $19 billion liquidated in a single day because order books were paper thin after all the market-making trauma from the last cycle. Fast forward to November, 3.7 billion has already flowed out of ETFs in these last 3 weeks alone. Blackrock's IBIT had the biggest single-day redemption ever. That's forced selling on top of forced selling. But the root cause underneath everything, the Fed stopped the party. They're still running quantitative tightening, QT, which means they're sucking roughly $40 to $50 billion of liquidity out the system every single month by letting treasury bonds roll off their balance sheet. No new QE, quantitative easing, no fresh dollars flooding risk assets. Higher for longer became higher for even longer. The dollar ripped higher, and crypto, being the most leveraged, most speculative class asset, it's taking the full brunt of it. Now let's talk about the one thing that can flip this entire market, the December FOMC meeting. Right now, the CME FedWatch tool is pricing roughly a 70% chance of a 25 basis point cut and about a 30% chance they hold rates steady. That probability has been sliding lower every week as the last two job reports came in hot and inflation refuses to die. Here's the simple version of why this matters so much to crypto. A December cut, any signal that QT is slowing or ending in Q1, fresh liquidity means dollar weakens, means risk on rally, which means Bitcoin and altcoins rip higher almost immediately. If there's no cut, or they keep quantitative tightening on autopilot, that means the dollar stays strong, more forced deleveraging, and crypto continues to bleed into year end. We're also seeing classic late cycle on-chain pain. Short-term holders are underwater and capitulating hard. Long-term holders have distributed around $43 billion near the top, and exchange balances are rising again. More potential supply overhead. Combine that with corporate treasury risk, Microstrategy and others are facing pressure if price stays sub 90,000 for too long, and you get the perfect storm of selling pressure when liquidity is already tight. So where does prices actually go from current levels? We're sitting right now on a massive multi-month range between $80,000 to $85,000. This zone held as support multiple times in 2024 and lines up with the 200-week moving average. Above us, the first major resistance sits at around $90,000 to $92,000. This is the previous level breakdown and a 50-week moving average. Reclaiming that flips the short-term trend back to bullish. Below $80,000 opens the door to a lot of air. The next big demand zone really doesn't show up till the mid to low $60,000 range, where we had that 2024 consolidation of highs. Bottom line, the December Fed decision is the highest conviction catalyst we have right now. A dovish surprise could spark one of the fastest short squeezes we've ever seen. A hawkish hold keeps the pressure on and risks a deeper correction into Q1 of 2026. Either way, volatility is about to go through the roof. Stay nimble, manage your risk, and keep an eye on those ETF flows and the dollars. They'll tell you everything you need to know before the headlines do. If this breakdown helped, drop a like. Let me know in the comments if you think we get the December cut or not. Subscribe with notifications on because I'll be back the second Powell speaks. See you in the next one and stay strong out there.